In this video, I want to go over what's called a kind of a delta neutral strategy using a calendar option spread. Hi, I'm Larry Gaines of PowerCycleTrading.com, and I like to look at different option strategies, and this is one that we're going to review today called the calendar. So this strategy, what it does, it's kind of a delta neutral. If we think there's a range bound kind of market cycle where we could cycle up and down just within a range and it not going to break out up or break out down, then this is a strategy to take advantage of time decay or theta decay, and we can do this using a calendar. Now, it's a great strategy also for kind of a shorter term duration where we sell the short term option and buy a little bit backdated option, taking advantage of theta decay on the accelerated theta decay. And so these are great to set up like on a Thursday, before a weekend, and you get a little bit of theta decay adjustment going into the weekends. And typically we can take these off a day or two later for anywhere from 2 to 3 to 4 to 5%, and it's a kind of a strategy that you repeat over and over every week. So let's take a look and I'll show you. So this is going to be using SPX, and this was set up here. The example I'll show you was set up on the 29th, and then you'll see the next day we've got the 30th and the 31st, and then you've got New Year's and you've got the long weekend. So this was set up here on the 29th, and then you get the theta decay coming in and just kind of sideways price action. So here's what it looked like the very next day. So on the 29th of December, SPX was trading at 47.93. So went short the 14 Jan 47.95 call, and then bought against it the 21 Jan 47.95 call. So both the same strike price, but just one, the short strike, is closer in. So this was about 15 days out, and then the long data was 6 days behind it. So short the 47.95, long the 47.95 here, and that's what we call a calendar. Now what it does, it's delta neutral. You can see the delta right here, and right there it's showing you, so delta neutral. So you can see the delta is showing like a 1.58, so pretty flat, not a trade dependent on any price movement up or down. That's what we want to take advantage. Now the thing that we're going to take advantage of is the theta. You can see here it's got a theta decay of about $25 a day. So if it doesn't move, we collect and put in our pocket about 25 bucks. So here it was, set this up on the 29th right there, and then the next day, the 29th, and then we came in the 31st, 2 days later. It was trading at 47.73, and this was up 8%. Let me back up and I'll show you the day after. So here it was the next day. So the 29th, and then the next day on the 30th, it was trading at 47.99 right in here. And this was up $65 per spread. So 6.5% return in one day. So these are a great type of way to play income, and you do this weekly, usually typically on a Tuesday or Thursday, take advantage of theta going into the weekend. So one day later, up at 6.5%, and then the next day on the 31st, it was trading at 47.73 right here, and now it was up $80 per spread, or 8%. And currently today, let's take a look at today being the 4th of January, and let's see where it is currently. So today being the 4th of January, the spread, which was set up at $9.90 debit, is now $11.30, so it's up about $139, $140. So that's a 13% return, and it's trading just perfectly in that range right here. Now we've got the break evens here, so what we can do is we can make adjustments. So if it comes down to break even, you either stop it out, or we can adjust the trade into another calendar. So a lot of flexibility, but this is an income type trade where you're just looking for a short-term gain either the day after or the next day, 2 days. Typically you'll take it off after 1 or 2 days later for anywhere from 2 to 4 to 6% return on your capital. So I hope this was helpful to you, and make sure to join us at PowerCycleTrading.com, where we do a lot of different option strategies.